Hi, my name is Pete Hahn, and thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of video tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues.
Hi guys, welcome to the video. Boy, this has been such a busy week. Here it is Friday, long after the markets have closed, and I'm just now getting around to publishing a video that I was planning to do on Wednesday. Well, it's just been such a busy week. I've been working on custom projects for many of our viewers. I'm so grateful that I've been so busy. It's been one of the record months for income for me because of all these custom project requests that have been coming in through our website. Very excited to have all of that work to do, but boy, am I wore out. Let me tell you, I am just wore out. I'm looking forward to the weekend. I hope you are too. So in tonight's video, we've got some really exciting stuff to report. In previous videos, we've been talking about the 4 major U.S. indexes, 3 of which have been forming a head and shoulders pattern, and we've been waiting to see whether that pattern was going to break or complete. And boy, have I got some big news for you tonight. So stay tuned for that. The other thing I'm going to do is I'm going to walk through a couple of the long-term positions that I've got. I do some swing trading of high-yield stocks, and some of those stock positions are planned to have covered call positions. So the idea is to buy a stock, let it run up a little bit. When it hits some major resistance levels, sell a covered call against that stock. If it pulls back, you get to capture all the income from selling that covered call, and then you just roll it out as it goes by. If the stock continues higher, well, guess what? You keep that premium that you sold that covered call for, and you get called out and you exercise, you're out of the stock, you find another one to buy. So that's my plan. That's the covered call strategy that I've been working, as well as my high yield stocks that I treat as a buy and hold. I had earnings released on one, took a big dump on that one, but it's still not too bad because I made enough on the dividend that I collected to cover the loss that I'm taking on the price performance. So we'll take a look at that. Also, I wanted to show you there's a tool in Thinkorswim called a strategy rollover. It's a way to automate the rollover of covered call positions. I spoke to someone at the trade desk on TD Ameritrade, and he gave me a link to a video. I'm going to provide that here later on in my video, show you how to get to that link and watch that video. And it's really exciting because if you've got a lot of covered call positions, say, a dozen or more, then it can take up a lot of your time trying to roll those over. And if you need more information on the covered call strategy, we may go into that more in depth later on in another video. But for now, just keep watching these videos. And as I'm doing them in my live account, I'll show you step by step, and gradually you learn and pick it up. But you can Google it. It's called covered call strategy, and you can Google that and get plenty of information and different ways of managing that. My trading buddy Larry, he uses collars for his, and that's just a different way of applying the options to lock in profits and collect income while you're holding on to the stock. Let's see, the other thing I would like to do is try to add kind of a bonus feature to the end of each one of these videos. We'll see if I can cram in all the stuff that I want to and have still a few minutes left over to cover some bonus material at the end of the video. So stay tuned, and let's go ahead and dive right in. First, let's make sure we clearly explain that I am not a professional trader. I'm not a certified financial advisor. There's nothing in this video that you should interpret as a recommendation or an advertisement to buy or sell any financial instrument. Trading involves risk, and that risk means that you can lose all or even more than all of the money in your account. Okay, having said that, let's go ahead and dive right into the major indexes. Right now, we've got the Dow Industrial Average. I'll go ahead and zoom into that chart a little bit more so we can see the head and shoulders pattern here that I've been talking about in this video series. You can see the neckline here, and the neckline was a strong level of support. And you can see that we closed the week right in the middle of that previous range of that high and the low. And we're just waiting to see if this is going to either break out above into new highs, in which case the head and shoulders pattern is broken, because that will have meant we made a higher high. Or will it break down and complete the head and shoulders pattern? In other words, do we get a close below the neckline and that would then complete the head and shoulders pattern, which gives us a trend of lower highs and lower lows. So the head and shoulders pattern, again, just for review, is simply a transition from higher highs and higher lows to lower lows and lower highs. It's very simple. It's just a shift in the trend. So you want to look for these head and shoulders patterns, learn how to identify them, and keep a close eye on them. Now, I've got an indicator on my chart that helps understand where levels of correction are taking place in the market. For instance, you can see back here in October of last year, we had a 10% correction, very strong buying, jumped in there at the end and pushed that back higher, but we did end up falling below that. There was more support here at the minus 12%, and then finally ended up down almost 20% down before the strong support came in and bought that up, and then we made new all-time highs earlier in this year. So we've been waiting to see if this is going to repeat. Is this head and shoulders pattern going to play out and cause another market correction? So the other thing we want to identify, and I covered this in the previous video, now this indicator that I've got is showing the market correction. It's showing the previous 52-week high, this blue line here, and then it's showing the different levels of correction. And the lines that are not labeled, those are my Fibonacci lines, and I'll show you how that works. I'll just draw a quick Fibonacci on the chart from here to here, and that's not a Fibonacci, that is a trend line. So let me change the drawing tool to a Fibonacci, and then we'll just do this here real quick. I'm just going to show you this one example so that when we examine all the other indexes, you understand where these lines are coming from. So what this means is when we make new all-time highs, we want to look for price as it reacts to this level, which is the 123.6 Fibonacci extension of the previous correction. And we want to look at this level here, the 138.2. And what happens is, as we studied in the previous video, those are areas when we go to make new all-time highs that sellers come in or people start taking profit. Okay, so we want to look very carefully at those levels, and you can scrunch the chart up here and you can see that my levels go all the way up to a 200% Fibonacci extension. What that means essentially is the same distance from the 100% down to the 0%. That is the same distance from the 100% up to the 200%. Okay, so there you go. And so how does this work now? If you're a dipper, okay, dippers buy on the dip. So if you're a dipper, then as we're making correction lows, you're buying as these lows are being made. And you're taking the risk that the market is not going to bounce, that the market's going to actually turn into a bearish market. And then as you have bought on these dips, then you're left holding the bag, and you can be down a lot of money, as we saw in last week's video as we examined the 2008 market crash. Okay, now the opposite of a dipper is a breakout trader. So you're either a dipper or a breakout trader. Really, that's the nuts and bolts of it. There's only two types of traders in the market. You're either buying on the dips or buying on the breakouts. Either one is taking advantage of the trend, and you have different risk parameters and different ways of managing your trade. So if you're a breakout trader, then what you do is you wait for the market to break out to new all-time highs, and then you buy. Well, how do you know when to sell? Well, you might want to be looking at your Fibonacci levels and consider that these are areas that are very likely to be stall points in the market where you might want to consider taking profits. Okay, this is not a recommendation to buy or sell. I'm not showing you how to trade and make money at this stuff. I'm just telling you this is what the different types of traders do in the market. You've got dippers and you got breakout traders. Okay, enough of that nonsense. Let's go ahead and remove this drawing and go to the next chart. Let's look at the Nasdaq. Now, take a look at this. We're going to zoom in here so that we can examine the head and shoulders pattern that was forming. And now look at this. We have made, it's barely noticeable here, but we have made a new all-time high. All right. You can see the neckline of that head and shoulders pattern. And you can see that we had on this wick, the bottom wick of this candle, we had a big excursion outside of that. That was nearly a break of the neckline and a completion of the head and shoulders pattern, but it didn't. Buyers came in and scooped it up. And as I said in a previous video, these lines are kind of areas. Don't take them literally. That line is just kind of an area. So these closes that were just barely below, that really doesn't mean that that line has been broken, okay? There's a lot of gray area around those lines, okay? Don't try to think that that's just perfect right on that line. It never works out exactly that way. So here's the great news. The great news is there's no longer a valid head and shoulders pattern on the Nasdaq index. The Nasdaq index has made new all-time highs for the year, and the head and shoulders pattern is busted. Okay, let's look at the S&P 5. Oh, and what do you want to do? What you want to do is you want to look at that was not a 10% correction. This was a 10% correction. So you'd want to go ahead and look at your Fibonacci this way. And then when you're looking at it making new all-time highs, you want to look at stall points here as you're making these Fibonacci levels here as we make new all-time highs. Okay, so let's remove that. Now let's look at the S&P 500. Now that is broken the head and shoulders pattern because that is above, that high of this week went above the previous high of the right shoulder of the head and shoulders pattern. So the pattern itself is busted, although the S&P 500 has not quite made a new all-time high. If you look at those two candles from here to here and look at the highs, you'll see, I think it was about 50 cents off. It's only 50 cents away from a new all-time high on the S&P 500. Suffice it to say that head and shoulders pattern is busted, and the likelihood of new all-time highs on the S&P 500 is very high. And again, if you want to go ahead and draw those Fibonacci levels, then that will help you in identifying where to expect profit takers or sellers to come in and the market to top out or pause. Okay, let's look at the Russell 2000, and we can see that just as in previous videos, the Russell 2000 has just been stuck in correction territory for, well, a year. And here we are stuck chopping around in this area of the previous correction, and the previous correction was massive on the Russell 2000. So the Russell 2000 is just directionless. It's just absolutely flat. And again, if you were dippers, the dippers bought here at the 10 to 12%, the dippers bought here at the 15 to 16%, and then they bit their nails off as it went down and crashed out of the 20% correction. The dippers were probably really sweating it out here. And if there's any dippers left that bought at these levels here, you can bet that they are really eager and anxious to sell as soon as they can get back to break even. So there's a lot of resistance here created by that. Think about that. There's a lot of resistance here created at this level because there's a lot of dippers who bought here and they are left holding the bag with no profit at all. And they want to get out and put that money back to use. They're looking at the Nasdaq index making new all-time highs, and they're crying and screaming, why am I stuck in this Russell 2000 trade when I could be over here in the Nasdaq? And they're going to get out as soon as they can, but they're going to hold on until they get to break even. I'm telling you, they're just white knuckling it. Okay. That's the psychology. I'm just telling you the psychology. I'm not telling you how to trade. I'm not trying to teach you, how to make money. I'm just telling you that's the psychology of what's going on in the chart. Okay, enough of this. Let's go ahead and look at some of my trades. Really, let's just look at one. Let's look at, no, there was another. I want to look at two. So let's go ahead and switch the chart over here to what I use for my long-term trades. And then this is the Goodyear trade. Let's go ahead and turn on and show trades right here. Check that box. We'll hit apply and OK. And you can see that I bought 100 shares at $14.80, and it was right here at this bar, $14.80. Now what happened is today there was earnings. Okay, so you see the earnings announcement right here, 51 cents roughly versus 45 actually. So they beat earnings. And there was a little bit of news that I captured here. So here's what you get from Thinkorswim. It tells you that a dividend is going to be paid on Halloween, October 31st. I'm going to make $16 on this stock if I hold it through that time. You can see the earnings. Then there was an earnings conference call. Earlier in the day, somebody upgraded and gave an upgraded price for Goodyear tire. I think it was $18 or something like that. And I thought, wow, that's great. I'll just hang on to this. And then later on in the day, I'm looking at my charts and I'm going, okay, wait a minute. We're at weekly resistance. Okay, we've got the 200-day moving average. We've got the weekly, over on the weekly chart, we've got the 50-period moving average coming down. Now, I really would have liked to have gotten up into that 50-period moving average, but we stalled out before that, and it's because of the resistance of that 200-day moving average. And so what I decided is this is a good time to go ahead and sell a covered call on this position. So I'll bring up this screenshot that I took earlier in the day. This is when I actually placed the order for the covered call. So you can see a -1 limit. That was in order to sell a 16.5 strike on Goodyear tire, and it was a covered call position. Okay, so let's go ahead and minimize that, and let's walk you through what that looks like. What happened is that I bought the stock over here on October 15th, and then if you go to the trade tab, and I went out 42 days, it was a weekly, and then all I did is I right-clicked and sell single. Okay, now what I did then is I upgraded this, and I set it to 80, and I let it sit there for a while, and later on in the day, market was going to close in about 15 minutes or so. I dropped it down to 75, and it eventually filled. Now when you hit confirm and send on this order, it tells you, number one, your max loss is infinite. Why? Because you're short a call. But this is a covered call because I own 100 shares of Goodyear tire. Now, what this means is as long as I have that short call in my portfolio, I never want to sell any shares of Goodyear tire. So I can't use a stop loss on Goodyear tire. I have to hold that until I buy back that covered call. If I sell the shares and I don't buy back the covered call, then I've got a naked call, a naked short call with infinite risk. All right, so remember the disclaimer I gave you in the beginning. That's what can happen. Infinite risk means exactly that. You can lose more than the money you have in your account. But because it's covered by the stock that I hold long, then I have a limited risk. In other words, the worst thing that can happen is somebody exercises that contract, and let's see, it was a 1650 strike. Yeah, so the worst thing that can happen is that I get exercised on this call and I have to sell my stock at 1650. Well, I bought it at 1480. Nice handsome profit. And if I don't get exercised, let's say Goodyear Tire Company pulls back next week, okay? Then the covered call begins to earn money, and I can buy that back later on at a cheaper price. As it is now, I've collected $75 on that covered call. So when you take the $75 and compute that against how many shares that I own at 1480, so really what I've done is I've picked up an extra 4.5% income on this stock. And if I hold it through till expiration on the 31st, then I pick up another $16 on top of that. So anyhow, that's kind of how it goes. Now, what I saw, and this is where I got the idea to include this in the video. You see this right down here, create covered call strategy. I saw that and I'm like, well, that's interesting. What does that checkbox do? So I contacted the trade desk and I asked them, and they sent me a link to a video. Now I'm going to delete this order here because that's already a said and done. That's in the history. And I want to take you over here to the monitor tab and show you that there's this section of the monitor tab. You see that? Account activity and positions, account statement, FX reports. There you go. Strategy rollover. Now, strategy rollover recognizes that I've already got a position that is a candidate for a potential rolling strategy. If you click that little arrow here and open that up, you can see I'm long 100 shares of Goodyear Tire and I'm short one December 19, 1650 call. And if you right click on that, you can select create rolling strategy, and your head's going to spin when you try to look at and understand everything that you see on the screen here. Okay, I'm not going to take the time to explain it because that's probably a half-hour video. Guess what? You can go ahead and go to this link. This is the link that I got from the trade desk at TD Ameritrade, and you can watch the video and they will walk you step by step through the process. And what I'll do in future videos, as I'm getting ready to manage this position myself, I can manage it manually, or I can opt to create a rolling strategy so that it will automatically manage it for me. Right now, there's not a lot of advantage to doing so when you only have one stock with a covered call. But if you've got a dozen or more and you've got like a dozen strategies that are rolling over and you've got to try to manage those yourself manually, that can be a real headache. That can really make your head spin. So it's really nice to have this tool available in Thinkorswim, Strategy Roller. Okay, so you want to take some time to watch that video when you get a chance. Okay, there was one more stock I wanted to look at, and then we'll try and get into some bonus material. I hope I have time for that. Let's see, we want to look at ARI. So ARI, we'll go ahead and look at that chart. You can see, boy, does that look scary. So I bought it here on August 29th, and you can see I bought it for $18.51. It closed the week at $18.16. You can see it had support here at this previous low. I actually had an alert set up there, and that alert got triggered, and I'm like, oh boy, okay, let's see how this plays out. Well, what I did is I looked at this dividend that I collected. I collected $46. So you take the 46 from the 18.51, and my net cost on that is actually just over $18. So $18, and now it's 18.16. So I'm kind of flat. If you look at that, if you look at my purchase price and you look at the dividend I collected, I'm about break even. I'm really not worried yet. I'm not ready to close this. Why? Because we've got strong support here on the monthly. We've got strong support on the weekly 200 period moving average, and it's a high yield stock. If I continue to hold this through the end of the year, guess what? I get another $46. So I have to factor all that in as I'm looking at this as a high yield stock that pays 10.1%, as it shows here on my lower subchart here. And so the idea is to see if I can hold this long enough to collect that other dividend. Now, the options don't trade very high volume on this stock, so I really don't have a covered call opportunity for this. But if I do get a big jump in price like I did here, then what I can do is buy a put instead to lock in my profits and protect from one of these things, what happens right after earnings. And so there you go. That was the other stock that I wanted to show you. Okay, and I just checked the time on this current video, and we're just over 20 minutes, so I really don't have a whole lot of time to cover this, but I did want to just kind of introduce this topic for you. We'll look at the scan tab on thinkorswim, and I've got a scan here already loaded. This is one that I run every day of the week and look for opportunities for my swing trades. And what we're going to do is we're going to look at how we create a dynamic alert. Now, a lot of people are requesting, how do I set up an alert that will send a text to my phone or an email? And there's only two ways in thinkorswim to do that. You can do that with a study alert through the Market Watch tab, but that is restricted to only one ticker symbol at a time. If you wanted to scan a group of stocks, something in a watch list, for instance, and you wanted to get signals based upon a scan sent to your phone through a text or sent to an email address, then your only option is to use a scan, save it, and then you click this hamburger menu over here, and then you select Alert when scan results change. That's a little bit off the recording screen here, so you can't quite see the rest of that, but that's Alert when scan results change. And I've already shown how to do this in one of our videos. It was the thinkorswim overnight range scan alert. And in that video at the 29.50 mark, if you want to go back and look at that, I show an example of how to set this up. And so I just wanted to show you real quick, just a few minutes before the video ends. The event is a symbol is added, a symbol is removed, a symbol is added or removed. So you can have this set up so that anytime something changes, it also gives you an update. You can change the name here by clicking the edit button. You can leave yourself a note. All of these things will be transferred through when you get the SMS or the email. Now, you also have to set up your SMS mobile number and your email through the application settings. We can show you that next. Let's go ahead and look at the rest of these settings for the dynamic alert. This is what I call a dynamic alert because it's running from a scan. And so with these, you can notify, you can play a sound, and you can select custom sounds too. And you've got these check boxes for the different options of how you want to receive your notifications. We'll scroll down and look at the very last bit here. And here you have some options on send me a notification, a message for every change, or a list of changes, hourly, daily, or weekly. And you can actually set an expiration date at a specified time, and then give yourself a little reminder of when this alert is going to expire. And then if you check this box, it will take you to the alert book after you click the create button. Okay, so that's dynamic alerts. Again, that's a way that you can write some custom code or build a custom scan and run it against a list of stocks, a watch list that you saved, for instance, and get notifications via email or SMS text on your phone. All right, we'll go ahead and cancel that. And I promised that I would also show you the application settings. It's very important. You go to Setup in the upper right-hand corner here, and then select Application Settings. From here, we select Notifications. Notifications is the second tab over right here. And you can see that I've got a confirmed email address and a confirmed SMS send text to, right? So that's a mobile number. You can't see that there because I've got that grayed out. And then you've got these different options, okay? Every time there's a system login, and you can set which methods of alerts you get. And you've got this one here for alert anytime an alert is triggered, and you've got options here. So you can go through all these different options and customize. There's one for rolling strategies. Okay, so you can go through that and make sure this is all set up, because if you don't do this first, then what I showed you in creating the dynamic scan won't work at all. Okay, so there you go, guys. I hope that I was able to squeeze that in there at the last without running the video too long for you. I do want to give you some bonus material every week that I do one of these videos, because there's a lot to learn on this Thinkorswim platform. And even if I'm repeating myself, things that I've already covered on other videos, I think the more I show you guys some of these things, the easier it'll be for you to learn them. You need to see this stuff over and over again before it really clicks, and before you really see how to get the most out of these things. You know, that light bulb goes off, the aha moment. Okay, so guys, thanks a lot for taking the time to view the video. Be sure and leave me comments in the section below the video so that I understand where you guys want me to take this video series next, what topics you want me to cover. Everything that I do here is driven by your feedback, so that feedback is very, very important. So thanks a lot for listening, guys. Really appreciate it. See you in the next video. Take care.
Thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues. Thanks, and take care.